بسم الله الرحمن الرحيم. إن الحمد لله نستغفره ونستعينه ونصلي ونسلم على الحبيب المصطفى عليه أفضل الصلاة والسلام. الأستاذ محمد خليفة سيقدم المحاضر دكتور نجدت سنسوي.
بسم الله الرحمن الرحيم، والصلاة والسلام على سيدنا محمد سيد المرسلين وعلى آله وصحبه أجمعين. يسرني بالنيابة عن الأستاذ الدكتور حاتم القرنشاوي العميد المؤسس لكلية الدراسات الإسلامية وباسم مركز الاقتصاد والتمويل الإسلامي بالكلية أن أرحب بحضراتكم في هذه المحاضرة، وأود أن أتوجه بالشكر الجزيل إلى سعادة الأستاذ الدكتور نجدت سنسوي وإلى سعادة سفير جمهورية تركيا بالدوحة. أشكرهم شكرا جزيلا. نشكر المحاضر أولا على تلبيته دعوة الكلية والمركز لإلقاء هذه المحاضرة رغم مشاغله الكثيرة. كما نشكر أيضا سعادة السفير على تشريفه لكلية الدراسات الإسلامية. وبالضرورة طبعا لابد من أن نشكر حضراتكم جميعا على حضوركم وتشريفكم لهذه المحاضرة. الأستاذ الدكتور نجدت سنسوي تخرج من أكاديمية اسطنبول للاقتصاد والتجارة في عام 1977، وحصل على درجة الماجستير من معهد المحاسبة في نفس الأكاديمية، كما حصل أيضا على درجة الدكتوراه من جامعة مرمرة، وأصبح أستاذا مشاركا في عام 1994 وأستاذا في عام 2002. عمل محاضرا بجامعة مرمرة في كلية الاقتصاد والعلوم الإدارية، وشغل عددا من المناصب، من أهمها أنه شغل منصب نائب رئيس جامعة اسطنبول للتجارة، وعين أيضا عضوا في لجنة التدقيق بالبنك المركزي لجمهورية تركيا، وهو عضو في هذه اللجنة منذ 2006. موضوع المحاضرة هو عن التحديات، هي طبعا عن السياسة النقدية أو تجربة السياسة النقدية للبنك المركزي التركي، وستناقش المحاضرة إن شاء الله التحديات التي واجهت الاقتصاد بعد الأزمة المالية العالمية والبنوك المركزية الجديدة والسياسة النقدية التركية والإطار الجديد لها، وكيف تمكنت تركيا من تحقيق النجاح في سياستها الاقتصادية خاصة بعد الأزمة المالية العالمية. Just few words in English. I would like first to welcome our respected guest, Dr. Necdet Sensoy, for accepting the invitation of the Faculty of Islamic Studies and the Center for Islamic Economics and Finance. We thank you very much for visiting Doha and accepting our invitation here at the faculty. And I would like also to thank His Highness the Ambassador of Turkey in Doha, and thanks to all of you who are attending the lecture. And I would like to convey the greetings of our Dean, Dr. Hatim al-Qaranshawi, and his apologies also for not being able to come tonight. Thank you very much.
We would thank also a Libyan ambassador. Very thank you for coming here. Center for Islamic Economics and Finance. I make a little presentation about our center. The mission of Center for Islamic Economic and Finance to produce policy-relevant, basic, and applied research with concrete analysis of national, regional, and international developments in Islamic economics and finance that can expand the body of knowledge about genuine financial product and development, inclusiveness, and sustainability through public policies and international trade, providing contextual maps for ethical, grounded economics. Focus area, Islamic economic institution, innovative and genuine financial product, promotion of trade, investment, and business in OIC region, inclusive and sustainable monetary, physical, and financial sector development policies. Objectives: planning and producing impact for research, supporting the research needs of our faculty, organizing research events like our conference, workshops, seminars, etc., establishing research network locally and internationally, developing proposal for external funding of research, reviewing Islamic financial product, institutions, and markets. Coordinating research and teaching of Islamic economics and finance. Our staff, the head of our staff is the founding dean, Dr. Hatem Al-Qaranshawi, our direct manager, Dr. Muhammad Khalifa, and we have 3 senior researchers, Wajdan Tariq, Karim Janina, and Behnaz Al-Qardaghi. Our event, it was the first event we organized. It's the 8th International Conference on Islamic Economics and Finance. It came after 1 year of our establishing, 2011. We received 800 abstracts. The authors came from 35 countries. And we have a lot of sponsorship from Development Bank, from CSREC, from Qatar National Bank, from Masraf Qatar al-Islami, from Masraf al-Rayyan, from Research Fund. We have a lot of activities in that 8th International Conference because it's very prestige conference. It's established in 1976 in Mecca, and it's serious conference. So to organize it in our center, it's a really a big achievement. And we, on 3 days, we presented 130 papers in different areas of Islamic economics. So it was great success, alhamdulillah. The 9th International Conference on Islamic Economics and Finance, it was in Turkey, in Istanbul, under the care of President Abdullah Gül. It was a very successful conference also. We received authors from 30 countries, and we have 1,595 abstracts, 80 reviewer reviews all the paper and abstract. 132 papers were presented in the conference, and it was a very successful conference because it covered a lot of area in Islamic finance. Public lectures, we have a lot of public lecture, one of them like that. Symposium we have seminars, we have a lot of activities. Publication, we publicate in a lot of articles and paper in different magazines, newspaper, and journals. Thank you for listening, and I am now waiting for lesson for Dr. Necdet Sensoy about the Turkish experience.
Dear ladies and gentlemen, I bring the warmest greetings from Istanbul, Turkey to you. Salam to all of you. Sister Behnaz has requested me to cover Turkish monetary policy experience, and I decided to cover the multiple tool monetary policy experience of Turkish Central Bank. Of course, the opinions I express here will be my personal views, not the Central Bank's views. Here, as an outline, we have 5 topics about monetary policy, but if the time permits, I can cover some Islamic finance experience in Turkey. The global financial crisis changed the perception of central banks. Before and after global financial crisis, especially before and after collapse of Lehman Brothers, the views about the function of central bank changed. And also Turkish Central Bank made the necessary steps, took the necessary steps for the new environment. What happened after the financial crisis? Here we have 2 charts. In the left-hand side, we see the policy rates in advanced economies as USA, Euro area, and Japan. You see interest rates are going down. Why? Because the central banks of those countries are giving money to the economy, giving liquidity, excess liquidity to the economy. And the consequence of this is the capital inflows to emerging markets from the advanced economies. When the central banks of the advanced economies increase the liquidity, that money flows to emerging markets, and this causes volatility. You see the volatility. It is not stable. Sometimes increasing, sometimes decreasing. The capital flow is not so big problem, but the volatility is the problem. And we measure risk appetite. You see risk appetite after 2008 decreases. Means the investors do not want to make investment in emerging markets as before. In 2010, after the crisis, what was the position of Turkish economy? There was a need for rebalancing in Turkish economy. Why? Because there was current accounts deficit and capital flows and credit growth as percentage of GDP were increasing. As you see in the left-hand side, in Turkish economy, the energy need is very significant. If you exclude the energy import, even sometimes in year 2008 and 9, we give a current account surplus, not deficit. But including the energy, we always give a current account deficit. Here we see the exports and imports. You see the imports are increasing in year 2010 onwards. Exports are decreasing. The reason was the contraction in European economies, because the main export market of Turkey is Germany and other European countries. When the economy contracts, means the demand decreases, our exports to Europe decreased. But thanks to God, our Turkish entrepreneurs achieved to find new markets, especially in Africa, in Far East, even in the Gulf area. And the lack of export to European countries somewhat filled with the new markets. Now, after setting the scene, I will cover what is the change in central banking. Before the crisis, let's say, before Lehman Brothers collapse, we call it conventional, and after, new framework. As conventional view, there was a single aim for the central banks, that was price stability, to keep inflation in low and stable levels. And there was single aim and a single tool, which is policy interest rate. After, as new framework, the aim expanded to include the financial stability. And instead of a single tool, multiple tools started to be implemented. We can make some critiques on conventional central banking. The conventional approach fails to account adequately financial sector risk and is therefore too narrowly focused. Before the global financial crisis, there was a universally accepted view that central banks should only be responsible for price stability, and prudential policies should be implemented in micro basis. After bankruptcy of the Lehman Brothers, this view changed. US Fed was ineffective to foresee and take necessary measures for mortgage crisis. The conventional framework assumes limited or non-existent cross-border spillovers of monetary policies. This last part, last sentence is very significant because after global crisis, we witness spillovers of monetary policies, especially the monetary policy of the advanced economies, for example, United States Fed. The monetary policy of Fed is spreading around the world and affecting all the economies. When we continue critics on conventional central banking, we can say that the incompatibility of national monetary policies in the presence of spillovers is heightened, as I have mentioned, when countries follow different monetary policy regimes. The period in which the inflation targeting regime was tested was exceptionally benign. This is before the crisis. Before the crisis, the generally accepted view or policy was inflation targeting policy. Many countries, starting with New Zealand, applied inflation targeting, including Turkey. But when we look at the environment in those days, it was very calm. There was no fluctuations, no volatility, and it was possible to apply inflation targeting. High levels of government debt in advanced countries and the slowing growth of traditional export markets for developing countries creates pressure on the central bank independence. The central bank independence is very important element of inflation targeting. You see after the crisis also inflation targeting and central bank independence is under debate. Now, the generally accepted view is that the central banks should safeguard price stability and contribute to financial stability. That means the central bank should not ignore price stability. Without damaging the price stability, should contribute to the financial stability. Academic work estimates a growth cost of 0.25 percentage points or 25 basis points for every 10 percentage points of rise in inflation. That means 10% increase in inflation results with 0.25% decrease in growth. Inflation damages growth. For financial stability, the critic point is credit growth. If there is rapid credit growth, then it is dangerous. Rapid credit growth is a leading indicator of financial crisis. From micro to macro prudential tools in financial regulation, when should the central bank act? A joint optimization problem is there. Using monetary and regulatory policies in concert to pursue price and financial stability, should central banks be primary institution responsible for financial stability. Here, there are two schools, two models in the world. Unified approach and coordinated approach. For example, in UK, before the financial crisis, banking supervision, which its responsibility is financial stability, was a different institution separate than the central bank. It was Financial Services Authority. After the crisis, British people decided to unify the banking supervision, financial stability issues, and central banking. But we see another example in Indonesia, for example. In Indonesia, before crisis, they were separate. Now they unified. There are two models, can be separate or unified. Supervision of the banks and the central banking functions. In Turkey, it is separate. It was separate after before the crisis, and still it is separate. We have banking regulatory authority, which works separate than central bank. In summary, there are two approaches. Number one, use capital flow measures to restrict inflows while tightening via interest rates. What was the fact? There were high amounts of capital flows. And how should we restrict this? Brazil and South Korea did it tightening, that means increasing the interest rates. Second approach is, without changing the policy rate, use macro-prudential measures to restrict domestic credit and domestic demand. Now, I will explain how did Turkish Central Bank do it. What are the non-interest policy tools? Balance sheet and liquidity measures, required reserve ratios, interest rate corridor, measures on forex rates and reserves, measures on US dollar swaps, measures on foreign currency denominated mortgage markets, and measures on loan security ratio can be mentioned as the non-interest policy tools. Let's have a look at the countries. In the top, we see the measures, and vertically, we see which country did applied which measure. For example, United States applied balance sheet and liquidity measures. That means injected money to the economy. Incorporating financial stability without diluting the price stability objective leans against the wind using a combination of monetary tools. Close coordination with other responsible agencies is a must. Better communication and greater clarity and coordination between central banks should be done. In Turkey, as in many other countries, we have a Financial Stability Committee. In the Financial Stability Committee, Central Bank is represented, Banking Supervision and Regulation Agency, BRSA, is represented, Minister of Finance is represented, and they come together at least once a month with the chairmanship of the minister responsible for treasury. When we add the financial stability to the price stability, and when we use more tools than one, we call it policy mix. Central Bank of the Republic of Turkey adopted a new monetary policy framework after November 2010. Low and stable inflation, that is price stability, doesn't guarantee macroeconomics stability. For financial stability, prudential tools are needed. Macro perspectives are needed rather than micro perspective. Only short-term interest rates not enough as a policy tool. Interest rates for price stability can be different than for financial stability. Without diluting price stability, those central banks applying policy mix incorporate financial stability. Here we can see a summary, old approach and new approach. Before the crisis, the objective was only price stability and tool was only policy rate. But after, price stability and financial stability are the objectives, and structural tools and discretionary tools are added to the policy tools. What are those structural tools applied by Central Bank of Republic of Turkey? Central Bank of Republic of Turkey after 2010 applied maturity-based reserve requirements and currency-based reserve requirements, leverage-based reserve requirements, and reserve options mechanism. I guess most of the audience know what is reserve requirement, but let me mention in one point that a bank collecting deposit 100 cannot place that 100 as loan to the economy. Some part of 100 should be kept in the central bank, for example 10. Then 10 is called reserve requirement, and the amount available for loan is 90. Of course, besides reserve requirements, there are also liquidity requirements. That means the banks cannot place total amount collected from the depositors. Now, there is a fact in Turkey that the maturities of the deposits are short. This is not good for economy. The maturities of deposits, if extended longer than 1 year, it is better because those deposits will be used for investment. To achieve this target, Central Bank of Republic of Turkey applied two different reserve requirement rates or ratios. If the maturity is less than 1 year, it is 11.5%. But if the maturity of the deposit is more than 1 year, then it is 5%. What is the purpose? To push the banks to collect longer term maturity deposits. Because if 100 is collected with maturity less than 1 year, the bank can give 89 of it as loan. But if it is a deposit maturity more than 1 year, can give 95 of it as loan. Here, for Turkish lira deposits and foreign exchange deposits, the rates you see are different. And also, the liabilities which are subject to reserve requirements are classified as core liabilities and non-core liabilities, because the amount of the reserve requirement ratios are applied on the liabilities of the bank, because the deposits are liabilities. Besides deposits, also there are other liabilities. For example, Turkish banks issue bonds. Also they are subject to reserve requirements. Then if it is not deposit, you see the rates are also different. The range for required reserve ratio, we talk about the range which is according to types of liabilities subject to reserve requirements. there are different rates for different kind of liabilities. Therefore, you see the range is in between, for example, in 2011, in between 16% and 5%. But later, it is decreased. It is decreased to 10% or 11%. You see, the average is under the top point of the range. Average is the weighted average of required reserve ratios. The point I have already covered about reserve requirements was about the maturity of the deposits. Now, another type of reserve requirement which is based on leverage. Leverage ratio, if more than 3, if in between 3 and if less than 3, if in between 3 and 3.25, in between 3.25 and 3.5, the reserve requirements are different. The purpose is to manage the liquidity of the banks, imposing different rates of reserve requirements. And there is a famous topic here that is called reserve option mechanism. The banks collect Turkish lira deposits and foreign exchange deposits. And these deposits are subject to reserve requirements in terms of the liability denominated. For example, if it is Turkish lira liability, reserve requirement is Turkish lira. If it is foreign currency liability, the reserve requirement is in US dollar, for example. But this option gives the banks to set aside the reserve requirement in a different currency which the liability is denominated. For example, your liability can be denominated in Turkish lira, but you can keep your required reserve in US dollar. To give this opportunity to the banks is called reserve option mechanism. How does it work? ROM gives option to hold forex, also gold reserves in increasing tranches in place of Turkish lira reserve requirements. You see here also gold is included. After this ROM mechanism, in Turkey, high amount of gold has flown from household to the banks, because the banks, if they set aside required reserves in terms of gold, it is cheaper than setting aside in terms of Turkish lira. Even setting aside the required reserves in foreign currency is cheaper than keeping it in Turkish lira. Therefore, this mechanism worked. What are the benefits of ROM? Smoothes the impact of capital flow volatility on exchange rates, balance sheet of Turkish banks, limiting the adverse effects of excess capital flow volatility. Thus, reserve option mechanism is an automatic stabilizer to changes in capital flows and contributes to the financial stability. How does it work? Central Bank of Republic of Turkey, depending on the economic conditions, sometimes increase the ROM, sometimes decrease. For example, if foreign capital is flowing in the country, central bank increases, and thus the excess foreign currency comes to the central bank without damaging the Turkish lira US dollar rate. ROM aims to support the forex reserve management of banking system, giving flexibility to Turkish banks, adjusting their forex reserves endogenously in accordance with their liquidity needs, and of course increases the forex reserves of the Central Bank of Turkey, or even gold reserves of Central Bank of Turkey are increased after ROM mechanism is applied. Here you see the ROM utilization ratio. Here in the left hand side you see 60%. That means 60% of the Turkish lira required reserve can be set aside in forex. And in right hand side it is lower in gold, it is 30%. But what is these are the higher rates, but the rates realized is under those highest maximum levels. How does it work? There is no single rate. For example, for foreign exchange, first of all, let me emphasize what is reserve option coefficient. There is reserve option mechanism, and there is also reserve option coefficient. Coefficient is putting some tranches of the Turkish lira required reserves and applies different rates to different tranches. For example, 1.4 to 30 basis points and goes on. This is total 60%. For gold, you see the ranges are different. That means there is no single rate applied. First, a coefficient is applied. After the coefficient is applied, the amount subject to the ROM is found. There are discretionary tools also applied by CBRT. Tools, funding strategy, and liquidity policy are discretionary. Turkish lira liquidity management, policy rate, weekly repo, and monthly repo are the tools. There is an interest rate corridor. I will show it to you. Now, until this point, we talked about the policy tools rather than interest rate. Now we came to interest rate. In conventional central banking, there is one interest rate determined by the central bank, which is called policy rate. But here, there are different rates which aims to keep the interest rate in between the corridor determined by the central bank. The liquidity of the economy is given by central banks. The banks keep government bonds, and if they bring their government bonds to the central bank for some time, for limited time, can get liquidity. This is called repo, repurchasing agreement. There is weekly repo, also monthly repo, but in last meeting of Monetary Policy Committee, monthly repo is stopped and weekly repo was called policy rate before, but now it is not called policy rate. What is the interest rate corridor? It is the overnight borrowing and lending rate of Central Bank of Turkey. And also there is a market in Istanbul foreign exchange market, Borsa Istanbul, for repo. Some days, depending to economic conditions, if the central banks wants to tighten the liquidity, some days are declared as additional monetary tightening days. If it is an additional monetary tightening day, then on those days, funding supplied via quantity auction method at the policy rate reduced or given none at all. Instead, market is funded via market price based auctions, and hence overnight rates settle close to the upper bound of the interest rate corridor. Here, the policy is that the central bank says, I will give a limited amount, quantity, with a predetermined rate. After that, if the banks need more liquidity, should go to Borsa Istanbul repo market and borrow from there, which is higher interest rate, and the average lower interest rate and higher interest rate applied, the average is the average funding rate of the banking system. Reserve option mechanism is also a discretionary tool, and ROM functions as sterilized forex intervention. What does it mean? If the central banks decide to intervene to the forex market, enters to the market as buyer, isn't it? Creates demand to the forex. Here, applying ROM, the central bank does not purchase the forex, but takes those forex foreign currencies to the central bank as reserve requirement. And this is called sterilized forex intervention. Why? Because if the central bank buys the forex foreign currency from the market, should give Turkish lira against it. And Turkish lira volume will go up. But here in ROM mechanism, the central bank does not give Turkish lira, but attracts the foreign currency to central bank. Here, after the explanations, you see the fluctuations in between 2008 and 2013, and Lehman crisis has happened in October 2008. You see there is overnight lending, borrowing, interest rate corridor. This corridor is the overnight lending and borrowing interest rate corridor. The central bank wants the policy rate should stay in between those limits of the corridor. And you see it is accomplished. Here we see the amount of interbank overnight withdrawing, CBRT funding, Istanbul Stock Exchange overnight withdrawing, 1 week repo, 1 month repo, and net open market operations as amounts. You see net open market operations is increasing in last month of 2013. I have mentioned that in Turkey the banking supervision is separate from central bank. It is done by Banking Regulation and Supervision Agency. And this BRSA also took many measures which helps the monetary policy of central bank. For example, levy on consumer loans, loan-to-value restrictions, risk weight on consumer loans, general provisioning requirements. Here, there are the measures in details. I will leave this presentation. Those who have interest can go in details. With the amendments on 8 October 2013 by BRSA, new regulations have been declared with regards to both corporate and retail loans. Amendments are made in retail loans related to credit card limits. This is very new, will be started in 1st of January 2014. Minimum payment ratios and risk weights in capital adequacy ratio. What is loan to value ratio and what is loan to income ratio? This is also a measure done by BRSA. If you will have a housing loan, for example, you cannot borrow more than 75% of the value of the house, let's say. If the house costs 100, you can borrow maximum 75. What is the new one? Loan to income ratio. You cannot borrow more than 25% of your income. This is loan to total income of borrower. This second one is now under debate in Turkey, but it is declared. Okay, how did Turkey do after 2010? In between October 2010 to August 2011, there was strong global risk appetite and short-term capital inflows were coming to emerging markets. In this situation, what did CBRT do? Aimed lengthen the maturity of the capital inflows and prevent excessive appreciation of Turkish lira. And what was the policy response? Reserve requirement ratios are raised to control domestic demand and to prevent excessive credit growth. After August 2011 to June 2012, the conditions changed. Look at here. In the first era, there was strong global risk appetite, but in the second one, there is escalation in global risk aversion. And what the central bank do? Here, tools are used in opposite direction. Turkish reserve requirements were reduced to decrease the liquidity requirements of the banking sector. Here, we have a look at the current account of Turkey. You see excluding gold and energy, excluding gold and total. When there is monetary tightening in between November 2011 and September 2012, when there is monetary tightening, the current account deficit goes down. But before it, macro-prudential tightening were not effective on the current account deficit. Here we see the total loan to growth rates year on year change. You see what happens in the period which there is macro-prudential tightening and monetary tightening, and macro-prudential tightening plus monetary easing, and at last monetary tightening. You see there are 4 different eras which the policy mix is changing, and you see the effect of it. The capital inflows in Turkey are coming as foreign direct investment and also as portfolio and short term. You see in last months, portfolio and short term is increasing. And what was the purpose of required reserves to increase the maturity of deposits? You see there is a little improvement. And international reserves of central bank includes the foreign currency and gold brought by the central banks as required reserves. Therefore, the international reserves are increasing. In emerging market economies, there were exchange rate volatility, but look at Turkey's position in end of 2011 and beginning of 2012. Although the volatility is very high in emerging economies, in Turkey it is not so high, under the average of emerging economies. This is good. And as I have mentioned in the beginning, there is inflation targeting regime in Turkey, and inflation target is 5%, but unfortunately we are 2 percentage points over the target rate. If it becomes at the end of the year over target rate plus 2, that means over 7, the central bank writes an excuse letter to the prime minister, to the government. If it is under target rate plus 2, that is 7, then no need for writing excuse letter to the government. There is a possibility we will write excuse letter this year, but there is also a possibility maybe not. It is in the critical point. And employment, you see the European countries here, also Korea, and compare annual average growth of employment, annual average growth of employment is higher among these countries. That means Turkish economy can create new jobs better compared to other countries you see here. And this is the picture of GDP growth. And also, the fiscal policy helps the central bank policies. Here, budget deficit to GDP is low in Turkey, and this helps central bank policies. And public debt also reasonable in reasonable levels. Even the European countries cannot achieve Maastricht criteria, but Turkey can do it. And here there is public debt comparison in between countries. You see Japan has high public debt, as it is known. Turkey is lower than the others. And in the right-hand side, we compare with the emerging economies. Indonesia, China, and Russia are better than Turkey, but Turkey is better than the countries at the left-hand side. And here we see the debt of the household and corporates. This is the right-hand side. Corporate liabilities is important in Turkey. In Turkey, there is no government debt, high amount, but the private sector has debt, forex liability. Housing loans are not so high compared to other countries. And let me summarize. Bringing inflation down to single digits has removed one of the most important obstacles to growth, as we have referred to an academic work in the beginning. A multi-instrument monetary policy supports financial stability by smoothing out the fluctuations in credit and currency. Improvements in price stability and financial stability improve balanced growth prospects in Turkey. Strong banking sector has been an important factor for the achievements of Turkey after the global financial crisis. The flexible monetary policy adopted by CBRT, as well as the strong balances, helps Turkey to take timely measures against any shocks. Here, my presentation about monetary policy of Turkish Central Bank ends. And now 1 hour is over almost. If you like, I can share with you the Islamic banking and capital and money market experience in Turkey, if you are not tired, but we can stop here also. Sister? Huh? Non-stop, huh? Okay. After okay. Okay then. Now break. Huh?
We can take questions and maybe the questions that come.
Break after questions.
No breaks. No breaks.
She doesn't give break.
No break, no.
But the audience requests, demands break.
We can make a question and answer after that a long break.
Okay. Okay, I can take your questions and comments.
You're welcome.
because it's difficult to collect you again after the break. That's the reason. We can take the first question about the Islamic rules in the Turkish capital market. If you give it us in 5 minutes, your view about that.
But the question should be about the first part.
Yeah, exactly. Okay. Let's ask about the first part, please.
If there is any question about the first part, any comments also, we can talk. If not, we can take questions about the second part.
Yeah. You can speak in Arabic. There is a translation, so no problem. Yeah, تفضل.
Okay.
بسم الله والحمد لله والصلاة والسلام على رسول الله. لي استفسار بخصوص الكوريدور. ما زالت تركيا تصر على الكوريدور بالرغم من أنها تعلم في النظم الاقتصادية العالمية.
Sorry.
Check.
Yes.
تعلمون جيدا أن أبدأ من الأول. بخصوص الكوريدور وتعلمون جيدا أنه فيروس ويستخدم في العلاج. الكوريدور فيروس يستخدم في العلاج، وأشار كثيرون بأن الكوريدور يؤدي في المدى البعيد إلى تضخم ويهدر الموارد المالية لأبناء الشعب، وظهرت كثيرا في الشرق الأوسط. فلماذا تصر النظام النقدي في تركيا على استخدامه كأحد السياسات؟ شكرا.
Why Turkey using corridor?
Okay, thank you. Actually, first of all, you said virus, isn't it? Yes. For interest. Okay, that is another view for belief and ideology. But there is a reality in Turkey that Turkish economy is an interest-based economy. What is our purpose, or the purpose of the government? Not to increase the interest rate so high, because interest rate is an element of cost. The interest rate corridor helps to keep the interest rate not to go up over one maximum limit. The corridor has two levels: minimum level, which is borrowing rate, and the maximum level is the lending rate. Putting that high limit, Central Bank of Turkey wishes to achieve, how can I say, affordable interest rate, not so high. It is useful to keep interest rate in a given limit. Thank you. But also, if we come back to the virus, also in Turkey, as if you like, we can go on. In Turkey, we started to develop Islamic finance. We have 4 Islamic banks, but we do not call them Islamic. We call them participation. Because, in my opinion, it is not good to say or to call banking with a name of a religion. There is no Christian bank or Jewish bank. Therefore, even in the global arena, the people likes Turkish title participation bank and participation finance. We have 4 participation banks. 2 of them are listed company, Since 1985, they are developing. In last 3-4 years, besides the banking, also capital and money market instruments are introduced in Turkish economy. These participation banks cannot benefit from the liquidity facilities of the central bank. Why? I have mentioned how the liquidity is injected to the economy. The banks bring their government bonds for repo, against it gets liquidity. The participation banks cannot keep government bond which is interest based. Therefore, until recently, there was an opportunity, this equality between conventional banks and participation banks. But central bank now changed this position. Also, the Turkish Treasury issued sukuk, which is Islamic bond. Actually, it is not a bond. It depends on equity, but generally it is said Islamic bond. Let me not go further. The sukuk issued by the Treasury, if bought by participation banks and brought to central bank for repo, now on central bank accepts those sukuk as collateral to the liquidity, collateral for liquidity. This is an achievement, a progress. Also, maybe you have heard, there is a new corporation called IILM, International Islamic Liquidity Management Corporation. Why I am here tomorrow, there is governing board of IILM, which is founded by 10 central banks, including Islamic Development Bank. And in 2013, Qatar Central Bank governor was chairing the governing board. I am the chairman of the audit committee of IILM. We, Turkish Central Bank, also invested in IILM. We have share in IILM. We are the one of those 9 central banks in, which are shareholders in IILM. IILM issued sukuk, short-term sukuk, to solve the liquidity problems of the Islamic financial institutions. These are 3 months maturity sukuks. The amount is now $490 million US, and recently it is rolled over. First 3 months ended and new issuance has happened. Now, if any Turkish participation bank invests in IILM sukuk, also Turkish Central Bank will accept it as collateral for repo, liquidity facility. And also in Turkey we have capital market instruments as indexes. There is katılım or participation index. And it is also useful for those who wish to invest in equity market in Islamic way. Okay, thank you.
Thank you. Another question? يا تفضل دكتور راجع. معبد عفوا.
I just want to know first if you know what's the market share of this participatory finance or Islamic banks to total finance in Turkey. And do you have a plan to expand this sector? For example, like Malaysia, they say they have a target to be in 2020 they would reach a certain percentage. This is the first question. Second question, I can see that the process of issuing money is totally lending based. It's based on government debt.
Yes.
Why don't you consider, or would you be willing to consider, that the central bank would also have another way of issuing money or monetary control through issuing certificates and of the investment certificates and investing their proceeds in participatory banks, and then in this case they can fulfill the function of lender of last resort to both conventional banks conventionally and participatory banks, shall I say participatorily. Thank you.
That's good idea. Thank you.
Yeah. The ratios of
first,
this, yeah, sorry.
First, the share is unfortunately 5-6 points in the banking system. Participation banks have, in terms of assets and in terms of loan, 5-6%. But now the government has an initiative to establish a participation bank owned by the Treasury, Turkish Treasury. That means state-owned participation bank. Now the preparations are developing. I hope that development will increase the share of the participation banks. Coming to the second issue, that is theoretical issue. The first, theoretically, the structure of the giving money to the economy in Islamic way should be structured. As I know, Iran has something like you explained, but even there, if I am not mistaken, there is an interest rate. There are several books. Actually, the literature on Islamic economics is not developing as the literature in Islamic finance. Islamic banking and finance literature is getting bigger, articles, books, etc. But the literature in Islamic economics is not so, maybe it is difficult. There are several books. First, the academics should work on it, structure the basement, and then some countries can apply it, implement it.
Okay, another question. Dr. Habib, Ahmed Habib.
Thank you for a very interesting lecture. I just was curious that you showed that in Turkey the employment growth rate was close to 4%.
Employment?
Employment growth rate.
It was the job creation rate.
Job creation.
Uh-huh.
And I was just curious, given what's happening in Europe, what is driving this growth in Turkey? Which sectors are the expanding sectors which is creating these jobs?
In Turkey?
Yes.
Yes.
The other question relates to, what was it? No, actually, you mentioned something about this notice, giving notice to the government if the inflation rate reports.
Sending letter.
Yeah. Now,
Not notice. Excuse letter.
Which means
what?
what?
That unfortunately we couldn't achieve the target for these reasons. Excuse me.
Okay. So, I mean, given the long history of inflation in Turkey, I would assume that when it comes to inflation, the central bank would be more sensitive in terms of keeping the inflation rate within the targets. I mean, 7% itself is not a very low target. In other countries, we see the target is sometimes 2 to 3% only.
Target is 5, plus minus 5. Target is 5, but unfortunately in 2013 it will be a little higher or a little lower than 7. This writing excuse letter is an issue of inflation targeting. In those countries, if there is inflation targeting, then the letter is written. What was the first question?
The job creation.
Yes, the manufacturing industry in Turkey, especially car manufacturing, is going up. And also the services sector is expanding. Those two are the priority having increase in the job creation.
Another question? Yeah. Yes.
Yes, thank you very much for this very well thought presentation. You as, Your Excellency, as a key person in devising probably the policy for the central bank to move out from the crisis that the world is witnessing, and specifically some neighbor countries to Turkey like Greece and others. In a very summarized way, what did the Turkish learn from this financial and economic crisis that has happened, and that learning contributed to probably some of those measures that you presented? Thank you.
Thank you. In Turkey, in years 2000 to 2004, we have had a banking crisis. And now we are indebted to that crisis. After that crisis, Turkish economy has recovered the banking system. And the crisis didn't hit Turkey in finance channel. The crisis hit Turkey in trade channel, commerce channel, because we lost our export markets after the crisis. In terms of finance, we were strong. Another point is that sometimes being undeveloped is becoming advantage. Turkish finance sector was not so complicated, so developed. The hedging instruments, synthetic instruments, etc. were not available in Turkey. That was an advantage for Turkey to keep the financial crisis yes.
I have my colleagues here.
Yeah, I have a quick question, probably a sensitive question as well. As a central bank, how do you manage the diverse opinions and disagreements you normally receive regarding your policies or your vision? From important stakeholders like the IMF, for example, if they say that this monetary framework is too complicated, well, what does the central bank then typically? I'm curious, what, as an insider, what would a central banker think? Do I have to convince the IMF of my view of what the monetary framework should be, or do I ignore them, or how does it actually work?
In terms of IMF, thanks to God, we are free of their mandate, since we have already paid our debt. Of course, there is Article number 4 inspection issue, but they cannot impose any policy to Turkey. Therefore, we are comfortable. But there are some different views in Turkey. For example, there are several economy ministers in Turkey. And for example, if Turkish lira is appreciating, the minister responsible for export is claiming. But if Turkish lira depreciates, he is happy. And this is good for checks and balances. Each and every minister looks from his own perspective. And in economy, of course, an issue not always good for all the actors of the economy. Some actors can benefit, some actors cannot. The critics not coming from IMF but inside. Also, of course, the investors investing in Turkey. For example, they were not comfortable that Turkish central bank didn't increase interest rate. They expected and they forced Turkish central bank to increase the interest rate, but central bank didn't do it, and they were not comfortable. They are not happy with the rates, interest rates in Turkey.
Dr. Evren first, and we have two questions more. Dr. Evren.
Yeah. First of all, thank you so much for the convincing presentation. My question, in fact, revolves around one of the questions, your answers actually, which is the impact of crisis on Turkish economy and especially the burden on the commercial and the trade sector. And on that front, one of your previous slides was touching on the role of the credit growth in Turkey. So, and there's a very important and sensitive relationship between the real sector, real economy, and the banking sector. So on that front, how do you see the connection between the banking sector in Turkey vis-a-vis these micro, small, and medium enterprises in Turkey? And they are the ones actually that have been hardly hit by the crisis. Especially Turkey is so much famous with the Anatolian tigers, those small and medium enterprises, which have been the backbones and the locomotives of the economy through the course of 1990s, which actually really helped the AK Party government and its kind of economic base, so on and so forth. So what does the Turkish experience say about small and medium enterprises and the connection to the banking industry? And can we have some implications on the whole Middle Eastern or MENA region that the Turkish economy can, or Turkish experience can tell? Thank you.
Thank you.
Another question here was?
The issue of, let's go one by one. The issue of small and medium-sized enterprises is very important. As you mentioned, the Anatolian tigers. In Turkey, we have a ranking of companies according to the sales from manufacturing. First 500 and second 500 companies. The number of Anatolian tigers in brackets in the first 500 and second 500 is increasing. Also, it is usually witnessed that participation banks are more helpful to those Anatolian tigers because they are manufacturers, and participation bank to give loan, there should be a purchase. They finance only, make murabaha, the needs of the manufacturers. Therefore, the help of participation banks to the small and medium-sized enterprises a lot. Also, the government has an agency supporting the small and COSGAP, small and medium-sized enterprises. To be an example to other countries, the most important advantage of Turkish economy is having political stability. Since 2003, there is a single government and stable political environment. This helped a lot the economy. And also the fiscal policy of the government helped because the budget deficit was under control since 2003. I have shown some charts about it. The government debt and the budget deficit, public budget deficit are in lower levels, and this is an advantage.
Just as a follow-up question, my expectation regarding the Turkey's experience as a model to other countries was actually with a different focus, especially the introduction of national incentive system in Turkey, which is based on the regions, and the government provides special incentive mechanisms towards different companies on different sectors and different cities. So, and one aspect of these incentives relates to financial eases, or in terms of energy consumption or taxation, so on and so forth. So on that front, actually, if you can, that's why I was asking if there's a connection between the banking sector, and the government is, of course, using the banking sector in order to provide those kind of incentives. And I think this might be an area for future research, maybe for Turkey as a model, and just as a kind of policy transfer to other countries, maybe in the region. Thank you.
That's right, there are incentives, but those are also debatable. Because when you give some incentives, sometimes the entrepreneurs are misusing that incentive. For example, you give a zero rate interest loan, the entrepreneur gets that loan but uses in different place instead of investing in the incentive given area. Also, the incentives are usually changing from this area to that area. There are complaints, etc. But in an overall look, yes, incentives are working. Thank you.
Yes, I will speak in Arabic. Okay. احنا حقيقة في العالم العربي، على الأقل أتكلم بصفتي الشخصية، نحس بأن السياسيين الأتراك هم أكثر انفتاحا علينا في العالم العربي من الاقتصاديين والبنكيين. لا نكاد نعرف الكثير عن التجربة الاقتصادية التركية، وبهذه المناسبة طبعا الحقيقة يعني أريد أن أسأل فعلا هل يوجد ضمن أكبر قائمة أكبر بنوك في العالم بنك تركي قوي له فروع في مختلف العالم العربي وحتى في العالم الآخر؟ احنا مثلا في قطر هناك بنك قطر الوطني أكبر بنك في العالم العربي والشرق الأوسط. هل هناك بنك بنفس قوة بنك قطر الوطني مثلا على الأقل في تركيا وله فروع في المنطقة المحيطة بالأساس؟ هذا السؤال الأول. السؤال الثاني، النهضة الاقتصادية التي شهدتها تركيا، هل ساهم فيها القطاع البنكي بطريقة متميزة؟ بمعنى هل هناك في تركيا بنوك استثمارية investment banks يعني قامت بدور تنموي حقيقي وأعطت صورة يعني فيها نوع من الابتكار وجدة في القطاع البنكي عموما حتى لو كانت قطاعا تقليديا يعني. وشكرا.
Thank you. In Turkey, we have around 50 banks, and 3 of them are government-owned, state-owned banks. And Turkish banks has branches in Balkan countries, some in Russia, some in Bahrain, and maybe in Qatar also. I'm not sure. But there are many in Bahrain. Huh? Not in Qatar. They are in Bahrain, isn't it? Yeah.
Kuwait Bank is opening a branch.
Which bank?
Kuwait.
Kuwait. Turk. Opening here.
Yes, open a branch.
Okay, one question.
The loan policy of the Turkish banks is leaning to consumer loans, not giving loan to the companies. Of course, it is available, but they prefer, maybe it is more profitable, they prefer to give consumer loans, credit card loans, and this increases the credit volume, and therefore the BRSA, Banking Regulation and Supervision Agency, is now taking measures to stop the increase in consumer loans, credit card loans, etc. And also, Turkish banks are investing in treasury bonds. For example, if you look at the balance sheet of the state-owned banks, Agriculture Bank, for example, Ziraat Bank, higher percentage of the assets are government bonds. Instead of giving loan to the economy, they prefer to keep a government bond. That is not. But if we compare this with the past, in the past it was very high. The banks were collecting deposits and were investing to government bonds and stop, waiting. Now, the percentage of loans given to the economy compared to the investment in government bonds now increasing, but should increase more.
Okay, one question.
Is that the last question?
Two questions, last question we have, and we finish, inshallah.
Can you short, please?
أنا بس حبيت أوجه سؤالي بالعربي بالنسبة لحق إعفاء الوزارة أو رسالة الإعفاء للوزارة في حالة ارتفاع التضخم. أنا كنت حابب أعرف الحق ده مستمد منين، يعني سنده القانوني، السند القانوني له الحق ده مستمد منين، وإزاي نشأ، وهل طبق قبل كده أو لا؟
Thank you. As I have mentioned before, it is an element of inflation targeting regime. And we started in 2006 inflation targeting. And in Turkish Central Bank's law, there is an article that the inflation target is determined with discussions of central bank and the government. The rate, the target, inflation target, is determined together, central bank and the government. After the target is determined, the job of keeping inflation rate in that limit belongs to the central bank. That's why central bank is responsible for that target rate. If it is over 2 points over the target rate, the letter should be written as according to the article of central banking law.
This happened before?
It was not before 2006. This started after inflation targeting. Huh? Yes, we sent excuse letters, yes.
Letters, not letters.
Letters, yes. More than one, yes.
Okay, being the last question here. Okay, being the last question, I just want to ask a quick question. That you have mentioned that there are two types of approaches to deal with the financial stability. Unified approach and the other is coordinated approach. I just want to know that which of them was more resilient towards crisis, and is it still continuing?
Which one is the
most resilient towards the crisis?
Actually, the case is that if you are having separate authorities as UK during the crisis, you say that the financial stability authority couldn't see, financial services authority was its name, couldn't foresee this crisis, therefore we should get it to the central bank, and they unified after crisis. But in Indonesia, they were together during the crisis. Now they said it didn't work properly, and we should separate it. Depends. There is no single solution.
So does it mean both of them failed to face the crisis?
Depends to the conditions of the country. Both can, of course, in principle, both can fail. Yes.
بسم الله الرحمن الرحيم. مع نهاية هذه المحاضرة القيمة أود أن أتوجه بالشكر الجزيل إلى الأستاذ نجدت سنسوي على هذا العرض الطيب لهذه المسائل المالية المرتبطة بتركيا، وأود طبعا أن أتوجه بالشكر الجزيل إلى الحضور الكريم، الشكر الخاص لسعادة سفير تركيا بالدوحة، والشكر الخاص أيضا لسعادة السفير الليبي بالدوحة، نشكرهم لتشريفهم كلية الدراسات الإسلامية، كما أشكر كل الحضور وأشكر الذين قدموا أسئلة ومداخلات. وفي النهاية طبعا لابد من توجيه الشكر إلى المنظمين لهذه المحاضرة، الإخوة الباحثين والأخت الباحثة بهناز القرداغي والأستاذ وجدان طارق خان والأستاذ كريم جنينة، وهم الذين يكونون مركز الاقتصاد الإسلامي والتمويل بالكلية. نشكرهم يعني شكرا جزيلا بالنيابة عنكم جميعا على هذا التنظيم الجيد للمحاضرة. والآن اسمحوا لنا بأن نقوم بإهداء درع كلية الدراسات الإسلامية لسعادة الأستاذ الدكتور نجدت. شكرا. وشكرا لكم جميعا. وطبعا تفضلوا ان شاء الله.